The broadcast is now starting. All attendees are in listen-only mode.
Okay, everybody, welcome to the weekly webinar. This is Neil Grain again with you, just like every Wednesday. I want to welcome you guys here from joining us from GoToWebinar, just like every week, and you guys from Facebook joining us right now from Facebook Live from our homepage. So welcome. You guys on GoToWebinar, just want to do a technical check, see that you can see the screen and hear my voice. You have a chat window, as you can see. All right, I just want you to write me down that you can hear my voice and see the screen. You're supposed to see our homepage on your screen, itrader.com. We good? Everybody can see it? Does anyone has any technical problem before we begin? All is good. All right. Okay, thank you, everyone. All right, then. Let's start. Okay, the topic today, as you probably know, every Wednesday, I'm doing these webinars for years, I think already. Every Wednesday talking about events that are taking place at the same week. Today we have the event, I think it's the biggest event in the market, will take place today at 6 GMT, 6 o'clock GMT. So make sure you know what time it is on your local time. We're talking about a US, which is the strongest and the biggest economy in the world, the US rate decision, US interest rate decision. I have a lot to tell you about this, to show you the market. Before that, just a few technical things. itrader.com, this is our website, all right? If you don't have an account yet, this is the time to open one. And how to join our webinars, okay? All you have to do every Wednesday, okay? Just click on Save Me a Seat and put in your first name, last name. Click on Join Now, first name, last name, and email, so we can contact you back, all right? The idea is to give you information and help you with the trades about what's going on in the market every Wednesday, okay? Show you how the events usually affect the market, and that's it. So if you're going to have any questions during the webinar, of course, you can ask me during the webinar, and I'm going to leave some time for Q&A session at the end of the webinar, talking about the interest rate decision today. All right, are we good? Can we start? Okay, guys, don't be afraid to ask whatever you like. Okay, this is what I'm here for. Of course, I'm going to leave, as I said, some time for questions at the end of the webinar. Okay, and you guys from Facebook, join us next time on GoToWebinar. It'll be much easier for you. So, trading the rate decision, July 2017. Interest rate decision. The rate decision is taking place in the United States 8 times a year, okay? So 1 month we don't have any interest rate decision, and then 1 month we have one, and the other one we have an interest rate decision, but with a press, followed by a press conference, okay? Usually the press conference takes place, usually it's 30 minutes after the interest rate decision itself. And just for you to know in general. Now, the Federal Reserve rate decision will be published on Wednesday, which is today, at 6 p.m. GMT time. All right, make sure if it's your time at 7 o'clock or 8 o'clock, depends where you're from in Europe. The decision will be followed by a statement, all right? And this is very important. I'm going to talk about the statement. This time there will be no press conference. As I told you, okay, we have 8 interest rate decision a year. In 4 of them, it's followed by a press conference. Now, the idea is that, you know, all the last time that we had a hike in interest rate, that interest rate went up during an interest rate decision, it took place when we had a press conference, when it was followed by a press conference 30 minutes after. Okay, today we don't have a press conference. The idea is that Janet Yellen, the head of the Fed, and the other members, they have a chance to explain exactly what they did, what they did, and you know, to talk to us and show us the details, or give us some information on the market. Now, meaning traders will receive all the information. Exactly, you're going to get all the information at 6 p.m. GMT time. Now, the current interest rate right now in the United States is 1.25%. All right, the rate is not expected to change, which means the forecast for today is for the interest rate in the United States to stay the same at 1.25%. but future expectations could change drastically. Okay, the main question is, will the Fed raise the interest rate once more this year? I just want to give you some background. Okay, if we go, let's try to take a look here. If let's go to Forex Factory or investing.com, whatever you prefer. You see, we have, this is not on GMT, but anyhow, federal funds rate, okay? All you have to do is I click here and I just show you some history, okay? Interest rate, by the way, after the big crisis on the 2008, the subprime crisis, went down all the way to 0.25%. And as you can see, it stayed the same for like 9 years, all the way until December 16th of 2015, all right? At December 16th, 2015, it was the first time that interest rate went up, okay? We went up from 0.25 to 0.5%. And then a year after December, another hike. Let's go to December the year after, okay? As you can see, another hike from 0.5 to 0.75%. Now this year, from the beginning of the year, interest rate went up from 0.75% to 1%. Took place on March. You see March 15 of 2017. And on June, we're talking about last month, we had another hike from 1% to 1.25%. Now, this is very important because right now we're in a new economic world. Let me explain it to you. Right now, the US stock market is at the highest point ever. Okay, stock markets are going up. Economic is doing great these days. Okay, I don't know if you pay attention to last NFP's unemployment rate in the United States is at around 4.3, 4.4%, which is more than 95% out of the Americans are employed, full employment, all right? Average hourly earnings is increasing, payrolls, we have more payrolls, which means the situation is very good. And you can see, you know, if we take a look on the stock market, okay, just to show you, let's take a look on the stock market right here. Let's take the Nasdaq, for example. Nasdaq, S&P 500, Dow Jones, and that doesn't matter, all the same. Okay, Nasdaq represents the 100 stocks with the highest value in the market. Okay, and open it monthly. You can see this is a candlestick chart, which means that each candle here represents 1 month. Of course, if we see a green candle, it means that Nasdaq went up. The 100 technology stocks, okay, their prices is getting higher, and a red candle means the opposite. You see, this is 2008, and since then, since January of 2009, you can see that Nasdaq is going up. All right, S&P 500 the same, okay, the highest point ever. Dow Jones represents the 30 biggest corporations in the United States. Look at what happens since the beginning of 2017. Okay, just going up. So what's going on in the market right now is the stock market is the highest point ever, and this is a great time for hikes in interest rate. Why? Because if interest rate goes up, usually the currency of the same country is getting stronger. In this case is the US dollar, all right? US banks, US bank stocks are getting, think about it, the banks are making more money. If interest rate goes up, it means that banks that give out loans to, you know, to people or to corporations or to companies, they make more money because what is the interest rate? Is the price of the money, right? If interest rate goes up, banks are making more money out of their loans, which means people are buying their stocks, okay? The big money is buying their stocks, and then the price of the stocks is going up as well. All right, gold and silver, okay, the what we call the metal commodities, they work as an opposite correlation. They're the parking lots of all currencies. They work with an opposite correlation with the US dollar, which means, okay, if we take a look at the US dollar, you will see, let me just show you. Let's take a look. Let's put the US dollar versus the Japanese yen on a daily chart. Each candle will be 1 day. As you can see, in the past few days, the dollar got weaker. Okay, and the gold is doing exactly the same. It's getting stronger. You see? Exactly opposite correlation between the US dollar and gold. I want you to remember that. And of course, usually when interest rate goes up, people put their money in the bank on a non-risk, which means they have to sell something, so they sell stocks. Usually when interest rate goes up, okay, the currency is getting stronger, The bank stocks are getting stronger, but the major stock market is getting weaker, because if I put my money in the bank, I have to get it out of somewhere, which means I have to sell stocks, and the opposite. All right, so think about it. Okay, it works that way. Now, let's go back to the PowerPoint. Okay, so interest rate, as you can see, went up twice this year. We had two hikes from 0.75% to 1%, and then from 1% to last month from 1% to 1.25%. And this is very important because this thing didn't happen in the past 11 years. Okay, we're talking about 11 years that interest rate, we didn't have two hikes. And at the beginning of the year, Janet Yellen and the Fed, they talk about 3 hikes this year. Okay, so as you probably know, this market is based on expectations. We have to see, okay, what they're going to say today on the statement after the interest rate decision. All right, good. Any questions so far, guys? Are we good? You with me? Okay, so let's click here. Okay, so the current, as we said, the current interest rate is 1.25%. The rate is not expected to change, which means the forecast is for the interest rate to stay at 1.25%. And I remind you, as I told you, when we have an interest rate decision that is not followed by a press conference, just like we have today, in the past, I don't know, almost 20 years, we didn't have a hike, okay, without a press conference. So check this out. Future expectations could change drastically, and the main question is, will the Fed raise its interest rate one more time this year? So we have to look at the statement, okay? If the Fed and Janet Yellen are talking about another hike from now till the end of the year, we had 2 hikes already. We expect the third one. Let's see if they say, because if interest rate stays the same, okay, I'm gonna base, okay, and we're gonna base our trades or whatever we want to do on the decision of how many hikes we're gonna have, if we're gonna have one more hike or not. Now, if the statement at 6 p.m. GMT time shows that the Fed will raise its rate again this year, then, okay, and you can write it down, guys, the US dollar could receive fresh demand, okay? As you probably know, the market works on demand and supply. If we have more demand for a certain asset, the price of the asset is going up. If we have more supply, it goes down. If people want to sell, if people would want to get rid of the US dollar, the value of the US dollar is getting down. If we have more demand for the US dollar, okay, then the value of the US dollar is going up. So if they're going to say, if the statement we're going to say of the Fed exactly on the interest rate decision is going to take place, as I told you, exactly at the same minute, at the same hour, at 6 p.m. GMT, if it shows that the Fed will raise its rate again this year on the statement for the third time, as they promised at the beginning of the year, then the US dollar could receive fresh demand. Now, if the statement at 6 p.m. GMT shows that the Fed won't raise its rate again this year, then the US dollar could receive more downside pressure, okay? So a third hike in interest rate this year on the statement, even if the interest rate stays on 1.25, okay? If we have an expectation for a hike, fresh demand for US dollar, and if we don't, okay, if the Fed are talking about, even though the US stock market is so strong, so I don't know, but we have to listen to what Janet Yellen says on the statement. But if they say 2 hikes is enough, then the US dollar could receive more downside pressure, just like we had in the past few days. Now, the impact of the publication is expected to generate strong trading opportunities, okay? Interest rate decision, you have to understand, it's the biggest event in the market, all right? A lot of volume, a lot of money coming in, okay? A lot of trading opportunities. Just try to follow it and understand where it's going on 6 p.m. GMT time. Assets to trade, okay? A lot of people tell me, okay, I don't want to trade on one asset. I want to diversify my portfolio. I want to split the risk, not put all the eggs in one basket. Very smart, okay? Very smart. It doesn't matter what the event is. It doesn't matter what you trade on. 2 major things to do, what I think is the best thing is, one is always combine the technical analysis, and I had some webinars talking about it in the past 2 months, talking about technical analysis, since a lot of customers are asking me, time after time to do some technical analysis. We did it 2 webinars ago. By the way, you can find it on our homepage, okay, at itrader.com on Facebook. and combine this with the fundamental analysis, just like we're doing right now in the interest rate decision. Now, assets to trade on: more rate hikes, okay, represent more demand for the US dollar and US bank stocks. We said it. Higher interest rate is good for the currency and is great for the banks. So we can trade in, you can diversify your portfolio and not put all the money on US dollar, but you can take a look at the US banks as well. Less rate hikes, okay, could push the dollar lower and generate demand for gold and silver. We said gold and silver, the metal commodities, they're the parking lot of all currencies. When we have uncertainty in the market, usually, especially with the US dollar, worked with an opposite correlation with gold. Usually when US dollar goes down, gold goes up, and silver. And when the US dollar is getting stronger, people sell gold. The big money is selling gold and buying US dollars. So less rate hikes could push the dollar. It's either 2 that we had already, or we're talking about 3. Okay, if they're going to talk about 4, it's going to be amazing, but let's not dream. Now, less rate hikes could push the dollar lower and generate demand for gold and silver. Market expectations are very low for more rate hikes this year. Okay, just for you to know, right now the market expectations, because we had 2 hikes already, we didn't have it for 11 years. A lot of analysis, they believe it's enough, but still, let's listen to the statement. The US dollar is on a medium-term downtrend, as I showed you. Okay, in the past few days, just for you to know what's going on with the US dollar right now. Let me try to show you again. Okay, US dollar in the past few days, the gold is going up. As you can see, if we take a look on the euro versus the dollar, it's going up as well, since the euro right now is getting stronger because of many other reasons. Mario Draghi have decided to stop printing so many euros, and the euro got stronger, especially versus the US dollar that is getting, actually it's getting weaker because of a lot of political reasons right now. One of them is I don't know if you know, but if you remember when Donald Trump was elected, he talked about cutting taxes and do government spending. Now, if you cut taxes, you have to get the money from somewhere. And he tried to cancel, if you remember, the Obamacare. But the thing is, he didn't have enough money, enough power in Congress to do that. So we have a lot of down pressure right now in the US dollar. As you can see, it's getting down. But yesterday went up a bit. So pay attention, okay, to the interest rate and to the statement, and it'll be much easier for you to see where the market is going. 2 hikes that we already had, or a third one. Okay, let's go back to the PowerPoint. Good. Okay, US dollar is on a medium term downtrend. Now the euro USD, okay, some numbers. Euro USD is trading above 1.16. I think it's around 1.1630 or 40 right now. Its next upside target, okay, the next resistance level is 1.17, and then 1.2 or 1.20 for the end of the year. I want you to write these numbers down, okay, to see if we have a technical breakthrough of these prices, or if these prices will be a strong resistance and the price will go back down. So the next upside trend, euro dollar have an upside trend, says the euro is getting stronger, and we talked about it, the US dollar right now is getting weaker. Next upside trend is target, is 1.17 and 1.2 by the end of the year. US politics also dragging the dollar lower, just like I talked about, but just what I said about Donald Trump and the Obamacare and so on. A lot of political problems, so the US dollar is getting weaker. The rate decision could have a strong effect today. Today is Wednesday, okay? Will the dollar continue its decline, or will it receive fresh support? We're going to see it today. Now, traders are recommended to diversify their trading portfolio on Wednesday today. As I told you, always, it doesn't matter what you trade on, any event, even if you just trade technically on the everyday, especially on such a great event as you have today. Pay attention that if you want to trade on the US dollar, it's great. But you know, you have a lot of pairs. As you can see, US dollar pairs will be affected. These include, you can trade US dollar versus Japanese yen, euro versus dollar. Just pay attention that if you believe that the US dollar is going to get stronger, okay, it means that the euro versus dollar is going down, and the opposite, because here the euro is the major currency and the dollar is the secondary. So pay attention. US dollar versus the Swiss franc, the Aussie, the Australian dollar versus US dollar, and many more. So if you want to diversify and trade only on the US dollar, you have a lot of pairs, a lot of opportunities not to take only one asset, not only one, the dollar versus the euro versus dollar, for example, but to diversify. Now, traders should prepare trading setups on their favorite assets. Each one of us have favorite assets as we know the price, by heart. And I suggest before any trade you take, I wrote here, trading setups include support and resistance levels per asset, okay? It doesn't matter what fundamental event you trade on, and especially an interest rate decision, which is a great and very effective event. Always look at the daily chart, okay, or 1 hour chart, and put some resistance lines and resistance and support levels to understand how high or how low the price might get, so you know where to put your stop loss and take profits. Okay, I love to work with protecting orders. Okay, protect yourself from losses, and from the other side, okay, know when to get out of the trade technically. And of course, good luck, guys. Any questions? Anything you didn't understand you would like me to clarify, I'm here for you. Okay, if you want to put some support and resistance lines on the chart, we can do that. Any questions about the interest rate decision itself? Supposed to stay the same, 0.25%. Let's take a few assets and take a look. Euro versus the dollar, okay, on a daily chart. It's on a resistance line right now. The next target is 1.17. Right now 1.1630. Pound versus the dollar. Sorry, again on a resistance line here. Okay, on a daily chart, the support line would be down here. You see that? All right, versus the Swiss franc. Okay, US dollar got really low. Right now it's getting, in the past 2 days, getting a bit stronger. Okay, but it's still a medium downtrend. So we have to wait for the interest rate decision today to see where it's going. All right, guys, any questions? This is the time. Come on, ask me. All right. Yes, it will take place today. Make sure if you're from London, I think it's 7 o'clock. Right, 1 hour difference from GMT, GMT plus 1. Yes, it's going to affect immediately, okay? Exactly at the same second. When you're going to see the interest rate, you're going to see the statement as well. Where you find the statement? Great question. Okay, where you find the statement? You go here to Forex Factory. And let's see, this is the federal. You see the forecast is 1.25%. And you can find, okay, Fed, the FOMC statement right here. You can click here and read it when you have it, okay? Again, what you look for in the statement is either we have the Fed thinks that 2 hikes because of many economic reasons that they're going to write down, okay, is enough, or we expect a 3rd hike. US dollar, opposite correlation with the gold. US bank stocks are going with the US dollar, and the rest of the stock market is going the opposite direction. All right? Pretty easy, right? Don't forget to diversify your portfolio, guys. Split the risk, trade smart, okay? And of course, I'm going to be here every week, okay, talking about the next topic. You're more than welcome to email me if you have any further questions, and contact your account managers for whatever you need. I'm going to be here every Wednesday at the same hour. It was lovely, and thank you very much for participating, and good luck today. Make some money. This is what we're here for. All right? Have a great one.